coverage you can count on continues with Drew Blair.
The stock market has been on an up and down roller coaster in the last few months. Many of those downs affecting people's 401ks and other retirement packages. More and more people are working longer just to be able to provide for themselves and their family after retirement. And joining me now is Mark Vandeveld from Hefty Wealth Partners. Thank you so much for being here, Mark.
Absolutely.
Is there any way really to plan for retirement? Can you retire and still live comfortably these days?
You absolutely can, Drew. I mean, truthfully though, the burden of retirement income has switched from the employer to the individual over the last 20 to 30 years, and it will continue to do so. You know, if you retired 20 to 30 years ago, it was likely you worked for the same company your entire career. You had a monthly pension waiting for you at retirement. Today, less people have pensions, and even those that do, a lot of the benefits stopped accruing several years ago. And then in the future, pensions are going to be the exception and not the norm. So your lifestyle at retirement is going to be completely dependent on how much you save and how you invest your money along the way.
We have a lot of age ranges watching us this morning. I mean, there are some closer to the retirement age where this is on their mind all the time.
Sure.
But then there are those in our age group that it seems so far off, and the number we're going to need in order to retire could change significantly from those older than us right now. So how do you even plan for that future?
It absolutely will be higher. Inflation will make sure of that, but we can't change that. We have to plan for it. And I think one of the most important things is to recognize where we are in our economy today. And we're no longer in the great bull market of the 80s and 90s. And unfortunately, a lot of people still invest with that buy and hold mentality. And what they're really doing is they're hoping that the market is going to go the right direction. And if it doesn't, they're not going to be able to reach their financial goals. At Hefty Wealth Partners, we use an active investment strategy that will help us to measure the risks in the market and therefore sidestep a lot of the volatility of the market, but yet still have the long-term growth potential you need to reach your financial goals.
How are those strategies different then for those people closer to the retirement age when they're weighing how much you need now versus 15, 20 years from now?
Well, it's all about planning. If we look at inflation, if inflation averages 4% a year, that means that costs will essentially double in about 18 years. And so you'd have to have twice the amount of income at that point than you do today just to be able to do the same amount of things. And so you really need to set out a plan. Remember that retirement is not a sprint, it's a marathon. Don't jump out of the gate. Really make sure your money is set to last the rest of your life.
Great information, Mark, and it always helps to know that if you plan, you can ease your concerns just knowing you have a plan. So thanks so much for your advice this morning.
Happy to be here. Thank you, Drew.